This is the AI News Flash for May 6th, 3 a.m. UTC. First up, Samsung Electronics hit a $1 trillion market capitalization for the first time in its history today. CNBC reports the stock surged over 10%, lifting South Korea's Kospi index to a record high. Behind the rally is explosive AI semiconductor demand, particularly for HBM memory, with accelerated mass production of next-generation chips for NVIDIA driving earnings forecasts higher. With the four major hyperscalers projected to spend $725 billion combined on capital expenditure in 2026. Samsung has joined SK Hynix as a critical pillar of global AI infrastructure supply. Asia's AI rally now stands in sharp contrast to the correction in U.S. software stocks, deepening the hardware versus software bifurcation. Crossing the $1 trillion threshold places Samsung alongside Apple, Microsoft, and NVIDIA in symbolic terms, and it is the first Korean company to reach this milestone. The race for AI semiconductor supremacy has now grown large enough to lift entire national economies. Next, sanctioned Chinese AI giant SenseTime says cost-efficient models can still win the global AI race. In an exclusive interview with CNBC, SenseTime executives explained that even without access to NVIDIA's most advanced GPUs due to U.S. sanctions, inference optimization and proprietary model design can deliver costs at a fraction of U.S.-made models. This follows the DeepSeek V4 preview, reinforcing China's open-source AI cost advantage narrative. New York Times reporting confirms developers in Nigeria, Malaysia, and Brazil can now build AI applications at over 90% lower cost than via OpenAI, driving rapid adoption of Chinese AI across the global south. Meanwhile, South Korea, Taiwan, and Australia have tightened government access restrictions on Chinese AI. The geopolitics of AI is being redefined along two new axes: cost efficiency and geopolitical trust. The U.S.-China AI decoupling has entered a new phase, with emerging markets as the primary battleground. The third story, Charles Schwab announced its entry into the AI market on the same day Anthropic officially launched private label AI agents for the financial industry. According to RA-Biz, Schwab's announcement lifted its share price, and competitors LPL Financial and Raymond James also rose in sympathy. Anthropic's financial AI agents autonomously execute investment research, portfolio analysis, risk assessment, and report generation workflows, integrating with Bloomberg, S&P, and FactSet data. Following the Blackstone-Goldman joint venture and the Asterix acquisition by Cisco, this move clearly demonstrates Anthropic accelerating a strategic shift toward private enterprise markets, particularly the financial sector in the wake of its Pentagon supply chain risk designation. Combined with JP Morgan's 200,000 employee LLM rollout and the 2,500-person job cuts at Citi and Morgan Stanley, Wall Street's AI adoption has moved beyond experimentation into the core revenue base. The battle for financial AI infrastructure leadership has fully begun. The fourth and final story, acclaimed Canadian fiddler Ashley Makazak has sued Google after its AI overview feature falsely claimed he was a sex offender. The Guardian reports that AI Overview generated factually false content that caused serious damage to the musician's career and reputation. Makazak is pursuing legal liability for defamation caused by AI-generated content. Defamation lawsuits over generative AI hallucinations have precedent, including the Mark Walters case against OpenAI in Georgia, but lawsuits targeting search-integrated AI like AI Overview pose fundamental legal pressure on Google's entire search business model. Hallucinations remain unsolved, both technically and legally, across generative AI, including OpenAI's ChatGPT and Anthropic's Claude. The shaping of legal precedent on AI company liability has now entered a phase that may directly determine the pace of AI adoption itself. That's all for this AI News Flash.